Just from my side, welcome here. We sat and just planning for the AGM and sharing with yourself what we've done. We put a video together to just share with you what we've done in 2018, and it's actually, I saw it for the first time on Wednesday, and actually if you go through it, you just get that reality check, how much you actually do in a year, and I can promise you what we're showing to yourself, we can probably still double that. So we would like to share with you.
At Capitec, we enable our clients to improve their financial lives. We want to inspire people to bank better so they can ultimately live better. Here are some highlights of the past year, starting in autumn 2017. The Bank Better, Live Better campaign launched an exciting new era for us, bringing colour, a new look and feel, and the emotive layer of our advertising to life. It started off with a glittering event, co-hosted by Top Billing, where our new TV ad was shown for the first time. We also collaborated with Red Bull to create unique Live Better music tracks, another first for our brand. This campaign will remain our theme for the immediate future. Our sponsorship of the Colour Run came to a colourful conclusion after 36 events. The annual BMO conference always happens in March, setting the pace for numerous regional conferences, as well as internal workshops like the CEO initiative, where the principles of our behavioral model were entrenched. The client is always first. We need to serve them with energy, and all of us must take ownership of every interaction with clients and colleagues. In the spirit of transparency, we started live streaming our AGM and asset manager presentations, enabling anyone to view the event worldwide. The 6th annual Internet Banking Satisfaction Survey highlighted our rise to the top spot in the digital banking category, as experienced by over 1.5 million clients every month. During the winter season, the Lafferty Group named Capitec the best bank in the world for the 2nd year in a row. According to Brand Finance Africa, we were not only South Africa's fastest growing bank brand, but one of the 3 strongest brands overall. Our credit card was given a new focus with the release of colourful ads tailor-made for social media. We refined our credit offer to provide clients with unsecured credit solutions that best suit their personal needs, whether it is buying a car, improving a home, education, or our credit card, at competitive interest rates similar to the secured credit market. A new online credit estimate tool was created to help our clients get a personalized estimate within minutes. This tool also saved significant time in the branches, thereby increasing our capacity to improve the opportunity for top-class client service. Winter also saw us teaming up with the Banking Association of South Africa's Star Saver initiative. This is a youth outreach program, a perfect platform to share our expertise and help learners in vulnerable communities to improve their financial literacy. The Capitec Foundation continued their sterling work to support high school learners and their communities. The year saw 298 high school learners supported with bursaries. 1,083 participants were reached through face-to-face workshops, and 2,303 people attended presentations and other financial life skills initiatives. During the spring season, Sunday Times recognized us as the best retail bank in South Africa through its Top Brands Awards. With our newly improved credit model already in place, we started the Rethink credit campaign to help our clients re-evaluate what credit can do for them as a vehicle to improve their lives. Credit became a lot more affordable and personalized to their needs. We sponsored South African Idols, and through our Live Better Talks platform, we engaged with the contestants using a variety of industry-relevant topics. These are educational events that bring together industry experts to share knowledge about their respective careers, money matters, and a general, well-balanced approach to success. During the summer season, we received the prestigious Company of the Year Award at the 2017 All Africa Business Leaders Awards. Our Bank Better in 2018 campaign launched at the start of the calendar year, highlighting the fact that banking should be part of your life and shouldn't cost you time or money. On the morning of January the 30th, we saw the release of a report by US-based short seller Viceroy targeting Capitec. Within 2 hours, we communicated with regulators, clients and our employees. And by 4 p.m. that day, a conference call with over 700 investors had been organized. At 5 p.m., we held a large press briefing refuting the allegations, once again showing our commitment to being transparent in all that we do. A host of analysts described our quick and effective communication as a textbook way of dealing with a crisis. Summer saw the sweet 16th firm foundations for the year, bringing the total number of firm foundations since 2005 to 258. 19,285 learners have now successfully completed the course, testimony to the passion we have for our people and our commitment to a unique service experience. After 15 years of Transact, Save and Credit, Global One expanded with the exciting addition of Insure. Alongside our very competitive credit insurance, we launched an innovative new funeral plan that will significantly simplify the process and bring great value to our clients. Through innovative technology, we moved 74% of possible transactions onto self-service devices, creating extra capacity in our branches to serve our clients even better. Our financial year came to a very positive close, with headline earnings up 18% and us celebrating another great milestone in reaching 10 million active clients. This year was not just the highlight of our recent history, but also another milestone in our journey towards building our company to become the best retail bank in the world. This is our company.
Yeah, I think it's a fairly ambitious vision to say you want to be the best retail company or bank in the world. What does it actually mean? What does it mean to be the best or world-class company? And I think you can judge us by that. The first thing is you need to be client-centric. Everything you do needs to be for the client. The second thing is you need to be innovative. The third thing is continuous improvement. Challenge yourself the whole time to do things better, quicker, faster. And then the fourth, and the most important, is your focus on your people that's doing and producing that area. So that's what we're focusing on, those 4 things, to make certain that we strive to become a world-class company. If you look at our vision, that is our vision, to enable our clients to improve their financial lives through simplicity, affordability, accessibility. I think the most important thing is, if I ask you who really understands these bank statements, who really understand their financial lives, who's really in control, that is our aim, to make certain that everyone fully understands what is happening in his financial world. If I look at our results, I think everyone knows 18% growth. I think it's an exceptionally good year given what's happened in the economy. I think 2 things. If you look at the credit side, I think we've done exceptionally well by controlling it, given the pressure on retrenchments and on the economy, and then tremendous strong growth on the transactional side. We've already mentioned that we're on 10 million clients. We ended up the year at 9.8, but now 10 million. And if you look at where we are currently, end of April, we're at 10.1. So we're still acquiring over 100,000 clients per month. I think the other important thing to highlight on this slide is a return on equity of 27%. I think that's also a very good performance. There's a lot of people that say we make, or our income is derived from credit mainly. What you can see from here is 41% is actually coming now from transactional. So our transactional side is getting to a 50-50 side. With us launching this week insurance, you'll probably go to a 50-50 side. So it's a well-balanced, diversified portfolio that we're running. And then on the transactional side, we've grown our transactional side with 31%. Our vision is to, by 2022, to cover 100% of our OPEX with transactional income. We're already now on 81%. I believe by 2020 we will be at 100%, especially if you now start earning or adding insurance on top of it. Operating environment. What's the environment we're operating in? I thought I'll just share our views. If I look at 2016, 2017, you had an economy that was very unstable. A lot of things happening at that stage. You had a Minister of Finance that was in and out. The exchange rate was then 16, then it was 12. Inflation was at 6, 7, 8%. So 2016, 2017 was basically you had economic instability as well as political instability. 2017, 18, I think you had much more stable economy. Inflation was coming down, interest rates were coming down, even on the exchange rate it was settling. And then, yeah, we all know the year of Zuma, what happened in the last year. We had a couple of finance ministers, so still instability. Now we're looking at the year ahead. I think the one thing that's coming out is everyone is positive, and for me that's the most important. If I look at last year, I think if you go to a Braaivleis fire, everyone was talking negative, state capture, etc., etc. Now what everyone is talking, we're positive about South Africa, and that for me is a very positive sign. But I think we need to be realistic. There's a lot of things that's wrong in South Africa. Fundamentally, there needs to be massive changes, and it's going to take, I believe, 18 months to 24 months before it really starts changing. I think one of the things that needs to be clarified is the whole land distribution factor. So, yes, we are positive. I think the most positive thing that happened in this last 3, 4, 5 months is in the last 4, 5 years, we had no invitation to actually talk to a minister. And in the last 4, 5 months, we had probably had about 10 or 12 invites. So there's a much better working together between the politicians and the private sector. But I think if you want to look at what is South Africa all about, I think just look at this slide. That's the 56 million people in South Africa. What is quite scary of that slide, 21 million of them are under the age of 19. So that's close to 40%. So we've got a very young distribution of people. It's people that's got ambition, that wants to do things. So we need to be aware of that. Even if you add the 20 to 34, that's another 15 million. So 35 million of the 56 million people in South Africa is under the age of 35. Just something to think about if you look at what we need to do in South Africa. So I think the one word that comes out here is education, because without education, you can't aspire to do things. If I look at just other stats, we've got 16 million people that's employed in South Africa, but there's 17 million social grants. If I look at formally employed, the difference between the 16 and the 10 is people that is working in the informal sector, but 10 million people that is formally employed. So 10 million people are actually looking, or if you actually take it down to the 7.5 million taxpayers, so 7.5 million people is actually paying for 55 million people. And if you're looking at it, people earning more than 1.5 million rand a year, there's only 110,000 people, and they're contributing 26% of the tax base in South Africa. So that's, if I'm saying there's something wrong in South Africa, what needs to be changed, we need to create an environment that all 55 million people in South Africa is positive and believe in what we're doing. And then just, I think we don't always realize that the average net salary is only 14,000 Rand in South Africa. If I look at what are we seeing with our clients, is the economy getting better or worse? What we do is we look at our banking clients and we look at their inflows. So we look at the cash that's coming in, and then we look at all the debit orders that's going off. So what we're monitoring is to say what percentage of the people has got then 40% cash available. Our book, it's not in here, but the book is 76% of our book has got more than 40% cash available. So that's for us positive. But you can see what the economy has done. If you compare this, the people earning less than 5,000 Rand, the people that's got more than 40% cash available has dropped from 10% to 6%. Even the people between 5 and 10 has dropped from 29% to 25%. And then your higher income people, you can see there the economy has helped them. So there's a lot of stress in your lower income people. So that gives you just a feeling of what's happening. I think I need to touch on Viceroy. I think the most important question is, what did we learn out of Viceroy? I think the first thing is the ability to clearly communicate and to be quick. I think it's a very good reflection on our systems. on our data, our information that's available, because if you haven't got that information, you can't react. We fully understood their plan. They've got an 8-point plan which they're working on. The previous 6 was executed. Point number 7 was executed this week with the audit, the letter to the audit committee. And yeah, the one that's left is the AGM. So let's see what happens. I think if I look at the most important thing is you build a brand on trust. And the moment a report like that comes out is how do you actually make certain that you rebuild that trust? Because a depositor is sitting and saying, I need to invest my money, and is my money safe? That's the question we had to answer the most. I think the other important thing is that you must never, from 0 to 0 is very quickly. You need to be humble, you need to challenge yourself the whole time, and you need to make certain that you deliver on your promises. And then the other thing is, I think all of us, wherever you go, you will have crises. And what happened that Monday morning or Tuesday morning when it took place is we very quickly said we've got 4 main objectives that we need to arrange. We need to communicate to our staff, to our clients, the media, and the analysts. And the moment you define it in those clear 4 objectives and you work out strategies on each and every one of that, then the plan and execution is quite easy. So I think the other one is we've reviewed every single policy, process, system in the last 2-3 months just to make certain that it works the way we intended it to work. So if I look at the Viceroy experience, it just brought you back and say, let's make certain that we can deliver on that promise. If I look at credit, it's maybe important to look at the market itself. If we look at secured credit, you can see it's 166 billion. That is what is granted in a year. 166 billion is 90% of that is cars. Now it's interesting that your car, if your vehicle finance is 166 billion, your mortgages is only 149. So your mortgages is actually lower than your cars. And that's actually just, it's a plain simple thing. If you look at trust land, you can't get a title deed. Places like Soweto, only 20% of the title deeds are up to date, so you can't actually get a mortgage on that. I think the other important thing is if you look at unsecured, it's 100 billion. If you look at credit facilities, which is predominantly done by credit cards, it's 64 billion. Interesting is that a credit card is acceptable, but it's consumption, because it's food, clothes, etc. Unsecured somehow is not acceptable or gets challenged. And we know if we track what our people are spending on it, 70% of that, and the way we track it, when the loan gets paid out, we track it where the people actually swipe his card. So we can see if he's spending it on building, we can see if he's spending it on education, etc., etc. And 70% is being used for building, education, vehicles, etc., etc. So it's an interesting perception that we have. But I think what is important is just to see the size of the market. I think what is important also, we've got a 26% market of the unsecured market. The perception is always there that we're the only player in the unsecured market, but the unsecured market, 80% of unsecured credit that's been provided has been provided by the banking industry. Our market in a total credit market is 5%, so there's a massive opportunity for us to still grow our market share in that particular area. If I look at what is happening in the market, what you can clearly see here is if you look at the below 5,000 Rand, there's a 3.3 billion retraction in credit that's been provided. If you look between 5,000 and 10,000, you see a 1.5 million retraction. So what you clearly see is the market is not servicing the lower income clients, and everyone is pulling back. We ourselves has actually said it's not worth, given the reputational risk, it's not worth playing in that particular market. And then you see strong growth and above 15,000 market. What did we do on credit? We had to manage the economy. We decided to be much more stricter on it. So we pulled back, and I will share with you the areas that we've pulled back. We also said we'll focus on a higher income area, and then the area that we're extremely proud of is the fact that we reduced pricing in the unsecured lending market now, where our lowest price is 12.9% per year, and that if you compare it to prime of at 9%, I think it's an exceptionally good price for unsecured lending at 12.9%, and I'll elaborate on that particular area. How did we go stricter? Variable income, if you look at this graph, what the NCA allows is 100%. What you can see where we're operating now, we're about 20% stricter on variable. Now what is variable? Variable is overtime and bonuses that's been paid out. And what the NCA allows you is to take an average. So the person, if he's got an overtime of 50 Rand the 1 month, 0 the next month, and the next month he's got 100, his average is 50. But it's very unstable. So we've just built in models to say if that is very fluctuating, we will limit the exposure to that, and that's why we're 20% stricter. If I looked at living expenses, there's a big focus at branch level, whereby the consultant must get the living expenses of our clients to make certain that we provide affordable credit and that we're not reckless. And you can see we're about 30% stricter than what the NCA actually allows. We've even gone now so far that we break down the living expenses for the client. He needs to give us the information, and then with biometrics, he must actually confirm that that is his living expenses to make certain that we've got the right living expenses. What have we done on the granting side? If you compare last year, the blue line, when a client comes in, 55% of clients that came in, so if 100 comes in, 55 was approved. Currently, we're only approving 27%. So if 100 comes in, only 27% will be approved, and only 21% will take up. And that's just us being very strict given what we've seen in the economy and pulling back. That gives you a very nice indication on what has happened with the higher income levels. You can see on the grey that it's now about 40% of our sales is going to people that's earning more than 20,000 Rand a month, and then the pullback in the lower incomes that has dropped. And I think it's best basically reflected in this graph, where you can actually, if you go and look at where Capitec traditionally played, was in the 1 to 12 month market. We can see our market share or contribution to our sales was 30% 2 years back. It's now only 9%. We've cut in the last year, we've reduced our sales in the 1 to 12 month market. We've reduced with R1 billion. And we've approved in the last 2 weeks, we've just approved cutting it back with a further 500 million. So we're just seeing more and more risk in that lower end of the market. Then you can see the credit card is growing to 14% of our sales, and then very strong sales growth in the 61 to 84, which ties up with your income levels. Question that Viceroy asked and said, but we're building our book on reschedules and on clients that is in arrears and client that disputes. We specifically put this in, and what we've done here is to say, in the last 6 months, if a client was in arrears, or he was rescheduled, or he disputed, and we lent to him, what portion of our sales is it? And you can clearly see from here it's only 2.5%. So it's a very small portion. I've gone through about, I think it's about 150 clients, one by one, going through and make certain that our models are working. And I'll leave this question with yourself. If a client, the one client that I worked through for 7 years was paying us 100%, and then 1 month he didn't pay. And then we actually granted him a loan 2 or 3 months later. Is that a good or bad client? That client is in this 2.5%. We believe that's a good client. If you look at his record over a 7-year period, he had a very good credit record. This is probably the biggest change that we've made in the bank on the credit side. We deliberately, and we said we are going to reduce pricings in unsecured, and we're going to make certain that people take up the right credit. So in this example, if you look at this, if a client qualifies for 84-month loan at 21%, if he decides to take shorter, he takes a 36-month loan, he gets it at 16%. If he decides to take it over 24 months, he gets it at 13%. And then if he takes it over 12 months, 12.9%. Interesting, if you look at the vehicle market, remember that 90% that I've spoken about? The average interest rate on vehicles financing in South Africa currently is 15%. So what we start seeing here is we're starting to get much closer to the secured market, and that's giving us that opportunity to attack it via the unsecured side. That, I think, is a very positive slide. Our people, our clients are not taking max loans, max term. They're going shorter. They're not taking the max amount. And what we're clearly seeing is 31% of our sales on the 48-month and longer category is now below 20%, which is a very positive sign. And that's in line with our long-term strategy to reduce prices. On the credit card, I think we had a very successful launch of the credit card. We started off with a monthly fee of 50 Rand. We then reduced it in September to 35 Rand, the lowest in the market. We've built a book of 2 billion within a 13-month period. We've got now 300,000 clients on the credit card. And what is interesting is we've only got a 1.9% market share on the credit card. But if you look at new cards that's been issued, we've got a market share of 27%. So if you look at credit cards that's going into the market, we now are controlling 27% of that market, so we see a lot of opportunities. Interesting, if you look at a credit card, you've got two fights with a credit card. The first, that the client actually takes it, and then the second one, when it's in your wallet, you need to make certain that it's first of wallet, because a normal client has got about 2.5 credit cards, so you need to make certain that whenever he pays, he takes out the Capitec credit card. There's a performance on our book. You can see our book climbed of 2 billion, yet our arrears dropped from 2.8 to 2.7 billion. It's dropped from 6.3 to 5.7. And then on rescheduling, you can see a massive pullback from 1.5 billion to 1.2. And then up to date, we've actually kept flat. And then on providing, if you just look at our arrears, if everything that's in arrears on what we're providing 226% on it. And if you take all rescheduling plus arrears, we're providing 115% on it. So I think if we really look at the pressure that we had to face given the economy, I think we had an exceptionally good year on the credit side. If I look at banking, I think this is the best secret in the market that nobody knows about. If you're overseas and you swipe your Capitec card, we don't ask you commission on that interchange. As long as, let's say you're in England, you choose pounds, you don't convert it back to Rand, because we will do it for you automatically, and that we don't ask you a 3, 4, 5% commission on it. So our people traveling abroad have saved 65 million Rand last year. If I look at our growth to 10 million clients, I think the one thing that stands out is absolute passion for service and making certain that our service is world class. We measure the service side, we measure everything. I can tell you that the average client in March waited 4 minutes and 31 seconds to be served. I can tell it you per branch. I can tell it you in 15 minutes intervals. Interesting, April with all the holidays, that increased with 30 seconds. So that's the detail we've got. If I look at service measuring, we're sending out now about 200,000 SMSs if you were in a branch or at BSC, everywhere where you made contact. We send you an SMS and you need to reply back and say you were happy with the service, the service was average or the service was bad. 88% of the people say the service was exceptional, and 4% say the service is bad. And that 4% is then followed up by our branch managers and our staff to actually find out what went wrong. So just measuring what we've done. On the self-help devices, I think it's one of our big success stories is that if you look at anything that could be done on a self-help device, and a self-help device is an app, a USSD, a DNR. DNR is where you actually deposit money and you can withdraw, or a self-help device in the branch. 74% of all transactions has been moved to self-help, enabling us to servicing our clients better. And then we've started, about a year ago, we've started with the CEO culture, behavior model. The logic behind this, I just said, don't want to be the CEO of everything. Each and every person working for the bank needs to be the CEO. Each and every person must take ownership of the bank. This is a video clip. Henk, he's the operational exec, was in Richards Bay, and he just felt this vibe in this branch, and the clients actually with a lot of compliments, and we just want to share with you the video of our own staff just talking about CEO.
CEO is about simplifying our behavioral model, making it easy to remember, but more importantly, easy to apply on a daily basis. We believe the client is always first in everything we do, demonstrating respect at all times.
As a consultant and as a manager of Capitec Bank, we're here to serve clients with a smile, with energy, with enthusiasm, and the more clients we see in a day, the better for us.
We serve them with energy and enthusiasm.
We are the conductors of our team. So once we actually show that passion, show that energy, it flows through the team as well.
And you have to have love for your job as well. So if you don't love what you do, you're not going to enjoy it.
And we must take ownership of every interaction we have with a client.
If you have that ownership and if you are accountable for your actions, automatically everything flows.
But with CEO, it's simple, you know, it just brings out a person's personality, it brings out your ethics, it brings out your morals and who you are as a person. So we are definitely glad to be CEOs of Capitec.
Be the CEO of your business. In every interaction, in every moment.
This is not also only at branch level, head office, all the different functions, all live the CEO dream. If I look at our volumes, I think if you look at this, total transactions up 27%, self-help up 37%, that's the red graph, and then the branch itself up 19%, so tremendous growth on the transactional side. Just to give you a bit of a feeling, we're in a volume game that you just understand. If you look at card swipes, 484 million card swipes that we've done last year, up 34%. If you look at debit orders, 118 million transactions that went through. But then impressive, the USSD, 361 million transactions been performed on USSD. And in the app, 106 million transactions been performed on the app with a growth of 105%. We all know Black Friday, 25th of November, that was my birthday as well. We measure the app on every single screen change. We had on that day about 70 million screen changes on the app or interactions. And then on the 15th of December, which was another big day in South Africa, by 10 o'clock we went past 70 million. So this gives you the ability that we've got to handle volumes. This is our distribution network, self-help devices, 467. ATMs, with our partnership with Spark ATMs, close to 4,600 ATMs. And then on the branches, 826, we're now close over 830. I think the important point on the branch side is where we were always rolling out 50, 60, 70 branches, we've cut back because what is happening is we don't need those capacity branches anymore. If a branch, we've taken a lot of the capacity constraints out, given the self-help. So we're focusing now on high potential branches. We can still grow. I still believe we can still get up to 1,000 branches. I get this question quite a lot, and that is, we've got 10 million clients. Where's it going? Can it go to 20 million? Can it go to 15 million? It's interesting if you look at our market share compared to the 55 million. So it's the same graph as what you've seen previously. We've just shown you our volumes, and we're showing you 9.8 because that was the February year-end figure. You can clearly see we've got here in between 20 and 54, we've got about a 30% market share. We've got a very small market share in the younger generation, up to 19, and I believe there's a lot of potential still in the 15 to 19 market. And then on the 55 plus, there's still a lot of potential. So I think there's still for us room to grow to 12, 13, 14 million clients. If I look at our clients, just maybe to share with yourself, we've had in January our highest ever acquisition month on new clients, 186,000 new clients coming in. Remember, Newlands is about 45,000, so you're talking about four Newlandses that you need to fill. The day the Viceroy report broke, we had our record of close to 9,000 new clients coming in. February was 155,000, March 146,000. So that number is still amazes us and is still growing at 120, 130,000 plus. If you look at this graph, we get this question: is client base 9.9 million now 10.1? The most important figure to look at this is to look at your banking clients. That's actually clients that is actually depositing their salary with ourselves. That's 4.5 million. And then our credit clients is only 1.4 million. So a very small portion of our clients is actually lending clients. And then our higher income, 15,000 plus, that is grown with 28%. On the savings side, interesting is that we've paid out on interest last year. We've paid out 3.4 billion. A third of our clients actually banked for free because their interest was higher than the transactional side. So they're actually banking for free. In the video that I showed, it was shown that we were part of the, or we're the third strongest brand in South Africa. And I think you've seen in this week that we have won now. We are the strongest brand, strongest growing brand in South Africa. So I think from a brand perspective, we're doing exceptionally well. And I think that's the result. If I look at the red and blue line is on our deposits, you can see the very strong growth. And then on the grey line, our wholesale deposit, that's funding that we need to get from other people, the Sanlams, Old Mutuals, etc., etc. We don't need that funding. We've got enough funding that we're getting out of our deposit base. But to keep in the market, we raise capital from time to time. We've just raised now 500 million, and we were 4 times oversubscribed. So if I look at the funding side, we had a very good year. People, interesting, 1,500 people has been promoted within the bank. Remember, we're 13,000 people in the bank. We appoint for potential and then develop people. 85 million on training that we've spent, and I think the most important is 49,000 learning interventions with our staff to make certain that they've got the knowledge and they're equipped to lead their people. And then 11 million been spent on internal bursaries and another 6 million been spent on external bursaries. 13,300 people working for the bank. You always look, if you look at the bank, you look at the number of branches that's grown, the number of clients that's grown. Last night, Johanni sent me a SMS. It was about 8 o'clock. You tend to don't look at these things, but even that shocked me a little bit because we just had salary increases now in May, and I just confirmed the salary run. And the salaries that we paid out last night was 260 million rand that was paid out per month. If you just take this bank 18 years ago wasn't there. So we've created a lot of opportunities. And interesting, of that 260 million, 80 million was paid over to tax. Our younger generation, 67% of our people are below the age of 35. Luckily, I'm also below that age, so I'm still qualifying. 62% is female. And then 93% is from black, Indian, colored areas. We're still very strongly focusing on appointing people from the community to serve the community. Then we've made, I think everyone knows about Cream Finance. We're operating in 8 countries. It's basically where Capitec was in 2000. Very high interest rates, very unregulated. We've learned a lot in our investment, and the focus is to actually create a single brand. Currently, they're operating with 18 brands, and to increase the product range and reduce pricing. So we're launching now in June. We're launching in Latvia. We're launching a one-brand strategy in line with what we've done with Capitec, and it will be quite interesting to see what happens. Then we've bought a 33% stake into Pre-Lexus for 25 million rand. It's a machine learning company with artificial intelligence to make certain that we stay ahead of the pack, and I will refer later on machine learning. Then probably the interesting one, some of the people are said we are looking at the insurance market. People didn't really believe us. We started 18 months ago with a project, first sending people into the market, trying to understand the market, looking at the opportunities. 12 months ago, we said, let's do it. The team got together, and on Monday, we launched the staff pilot in November, and this Monday, we've launched the insurance product, funeral. We'll start with funeral. We've created a platform that we can do any other funeral, any other insurance products. So this is the first step in the insurance roadmap that we're taking. Interestingly, I spoke to the Sanlam people on Wednesday. Sanlam is selling plus minus about 2,000 policies per day, and that's the total, that's all their policies. We started off on Monday and we were averaging about 1,400 policies per day with no marketing, nothing behind it, just the pure thing that you've got 830 branches and you've got 10 million clients to work with. On the 4.6 million clients that's banking with ourselves, we know that they've got funeral policies with themselves, so we will definitely start marketing to that. We see funeral, we've actually looked at the whole market. We believe there's a massive opportunity for us to be disruptive in that particular market. We see that the pricing is exceptionally high. So the brief was to be 30% lower than the market, and majority of the times we're about 50% lower than the market. On the benefit side, we've increased the benefits tremendously. So we believe that's a very big statement that we're making again, where we're saying Capitec is the client's friend in this particular market. It's a partnership with Sanlam, so it's exciting for us to work with themselves, and it'll be interesting to see what comes out of this venture. We're very excited about it. Like I said to the board meeting this morning, it's quite easy to sell. We need to collect next month, so let's see what happens. If I look at probably the more exciting stuff is to look at the future, because this is the history. We can do nothing about the history, but to look at the future. And if I look at the future, we want to share with you what we would like to produce by 2020, so that's 2.5 years from now. I think if you look at the video, think about simplicity and the sophistication that's actually behind that simplicity. Then look at remote onboarding, look at client insights, look at machine learning that's going behind it, look at payments, and then any bank or any organization will have a problem and somewhere there will be an issue. How do you do real-time service recovery?
Minenhle has been an architect for more than 15 years. She is smart and has worked hard to establish her career and business. She's an ardent soccer supporter, loves to travel, and enjoys all sorts of experiences that enhance her life. She has been banking with the same bank all her life and uses a lot of their products, yet somehow she still doesn't feel in control of her finances, with a nagging concern that she is paying too much for the services they offer. Don't they get that her life is so much bigger than just banking? She wants to save money and earn the best possible interest. Doing some research on the internet, she becomes aware of Capitec and the good interest rates they offer on their savings plans.
Upon visiting the website, a pop-up starts her personalized conversation with Capitec. She downloads the app, goes through the onboarding process, creates a fixed-term savings account, and transfers money from her bank into this new account without leaving the comfort of her home. She gets a notification informing her of the money paid into her new account. Shortly after, she receives a friendly service call from the bank asking if she's happy with the service thus far, as well as informing her about the features and benefits of Global One. She gets a notification on her app informing her to view her Global One statement on demand. As this is a savings-only dashboard, it shows a projection of the growth and interest she will earn over the term, plus projections of future growth and monthly interest should she refix for another term. She gets prompted to state what her savings goal is, and also has the option of adding an image to visualize her goal and add a value of how much she wants to save. Every week she receives a notification to state how close she is from reaching her goal and tips on how she can bank better to save more towards her goal.
Minenhle's Google behavior indicates her passion for travel and tracks her regular visits to different travel websites.
She receives a notification on her app that highlights the benefits of a Global One credit card for travel, as well as the Live Better benefit when buying tickets on Travel Start with your Capitec card. There's also a link to a site that shares tools and tips on how to use a credit card optimally. She applies for a credit card and gets a notification to collect her personalized card at her nearest branch. The branch locator informs her of her nearest branch, as well as offering appointment times that she can just click to accept. In the branch, she's introduced to biometrics that pioneers the safety of clients even further. The digital scanning of her fingerprints, as well as scanning her face and retinas for facial recognition purposes. Added levels of security keep her banking profile safe and secure.
She's amazed to find the process to be completely paperless and that the contract she signs is with her fingerprint only. She is very impressed when she gets introduced to the branch manager, confirming the personalized service experience Capitec prides itself upon. She leaves the branch with a credit card and a big smile, and almost instantaneously receives a pop-up on the app with a request to rate the service.
A few days later, she buys a ticket on TravelStart and receives a notification from Capitec to notify her on how much she's actually saved by using this Live Better benefit. A new notification on her app explains how to travel with her Capitec credit card, how to change card limits, the travel insurance included, what the fees are, and some travel and security tips relevant to her destination.
Minenhle is very impressed with how simple and easy her financial decisions have become. She starts transacting more on her card, making payments to her suppliers become quick and easy, as she can do this whilst on site. She never has to take extra time out of her busy day to do her banking. Some months later, when visiting a restaurant with friends, her card is declined due to technical issues. This is embarrassing and she feels let down by the bank. Needless to say, she tweets about this bad experience.
She's immediately contacted by the Capitec Client Care Department, who informs her that based on her profile and banking behavior, Capitec will make the payment on her behalf till the technical issue has been sorted out.
Impressed with the personalized service recovery, Minenhle now actively promotes Capitec to her friends and family, even on Facebook.
Shortly thereafter, she gets another notification alerting her about setting up her One Wallet. She adds her Capitec card, all her other banking and loyalty cards, as well as her ID and driver's license to her Capitec digital wallet, known as One Wallet. She uses it regularly for MasterPass, SnapScan or Zapper payments. When she now views her Global One dashboard, it shows all available balances, interest earned, spending pattern per category, her saving goals, and tips to save on fees and earn more interest. It also shows her credit score, tips on what she can do to improve her credit score, and includes an overview of her credit profile as well as an estimate of how much she could qualify for.
Minenhle has always had a dream to own her own Harley. Knowing what she could qualify for, she goes looking for the best cash deal on a bike. She finds the bike that she wants, applies for credit while standing on the showroom floor, and opts in for credit there and then.
A further notification informs her that if she wants to insure the item, she need only take a photograph and submit it, and the vehicle is insured immediately. As this is purpose lending, she qualifies for an even better interest rate, and because she is insuring this item with Capitec, she gets a further discount on fees. The third-party payment is finalized within minutes. Minenhle is prompted on her app to grant access to all her banking accounts, and her Global One dashboard now includes all her Capitec solutions, her One Wallet, as well as her shared trading accounts, loyalty programs, life insurance, and provident funds.
Finally, she has an overview of all her financial matters in one dashboard, aptly named My Financial Life.
Automatically linked to My Financial Life is relevant financial education information and tools to help her make better financial decisions.
Then, a well-known disaster strikes Minenhle. Her wallet gets stolen whilst on business in another country. She immediately stops her card on the app.
She gets a friendly phone call from a client care agent to find out if she's okay. And she gets issued with a virtual card on her phone, allowing her to make all her payments using her One Wallet.
Back in South Africa, she goes to her nearest branch to pick up her replacement card.
She's recognized immediately through facial recognition. The client service champion welcomes Minenhle by name and informs her that her new card can be collected from the service consultant.
In the Uber that she booked through a Live Better benefit, she realizes that apart from unforeseen circumstances like a recently stolen card, her banking has now become completely integrated in her daily life. She has indeed adopted the Bank Better strategy to help her live life better.
Yeah, if we look at Capitec, that's what we're working on. That was what we need to deliver. That's what we believe in the next 2 to 3 years is what the client wants. That's why if you look at this, we've got a digital innovation team of over 200 people that work separately on these projects to make certain that we can deliver on that. We use, just maybe to give you information, currently we've got 5 branches that's on facial recognition with about a 70% accuracy coming back. We've brought in voice recognition in our BSC center that we're testing to bring that in. We've started this last year with machine learning. Now, if you do affordability assessment of a client, the most problematic areas to identify the debit orders. So we had to learn the machine to actually identify those debit orders. So what is happening is we implemented it in August. We were about a 34% accuracy. What happens is the consultant is still performing the debit orders identification, but the machine at the background is learning on that. And by November, we're about at 98% accuracy on identifying debit orders. So what are you doing? Very simplistic, what you're doing is we normally on average take about 10 minutes to identify those debit orders. The machine can now do it in 30 seconds. And the most important thing is now you've got 9 minutes extra time to actually talk to that client and inform that client and make certain that he really understands what's happening with Global One. So it's not a matter of reducing time, but it's more focus on the client base. So there's a big focus on the digital space to make certain that we can satisfy the needs of the client. Because I think if you look at really where you want to go is word of mouth for me is still by far the biggest advertising forum that there is. You can spend millions on advertising, but if your clients talk about Capitec and they become brand advocates, that is really the magic that you need to unleash, and that's what we're trying to do. Just maybe the 3 areas that I've mentioned here. I've already spoken about facial recognition, but if I look at paperless, currently what is happening for the client, it's paperless, but at the back you still sign a contract, what we call wet, and that gets stored, and that needs to be stored if you take an 84-month loan for 13 years. What we are doing now and what's getting rolled out in the next week is that it will be completely paperless. You will sign with your biometric. So it will be a seamless process for the clients. And the one that excites me quite a lot is workplace banking, is that we've got a machine, we call it the Toby. The Toby goes out to employers to open up accounts. But what we've done now is you can open up account, you can open up the app, you can transfer money, you can convert a client, and if he wants credit, it goes through to our direct lending business, and a credit has been provided. So you're actually taking banking now to the workplace. And the other important one is we're giving the management information of the people that is banking with Capitec. Let's say you've got 300 people. I worked with a company in Durban the other day. They've got 300 people banking with ourselves, and we provided them full information on how the people are transacting, how they're saving, what is their credit records, not per person, but in global. Giving that HR manager information of the health status of its people. So it's just making certain that we understand that particular area. So the whole personal experience for us is a very important aspect. Then business delivery. I think the one thing, if you look at the client of 2025 or 2030, the one thing that stands out, the need of the client is changing quicker and quicker and quicker. And we've seen it in the last couple of years with the iPhones or the smartphones, how quickly the need is changing. So we need to make certain that we're agile and that we can deliver on those needs of the client. So there's a very big focus on delivering on those particular needs. Then the most important is our people. A very strong focus on developing exceptional leaders, or what we call great leaders. We, in September last year, our ExCo team has gone away for 2.5 days, and we just asked that simple question: what does it mean to be a great leader? And how do we make the rest of our people great? We've taken that through the senior management team, and we will continue right through it in this year. So, because the question of you like is that people take ownership on what they're doing, and the simple question or the simple thing that I would like to have people do is when they wake up in the morning, not to have an average day, but actually to do something great and really change the world. If I look at diversity and transformation, we've started with every single senior manager in the bank must develop a person from color. Because if we really want to be successful in South Africa, then we must unlock the full potential of 55 million people. So that for us is a very important aspect. And then lastly, on the people side, where we've always pushed learning down and said, you need to do this, you need to go on this course, or you need to complete this. We've changed it around to say it's now self-driven. So we make courses available, we make YouTube videos available, where people then themselves can actually decide what they want to develop themselves and to focus on. So there's a very strong focus on the people side. If I look at what is happening in the world, everyone is saying robots are going to replace the human being. Yes, that's going to happen. We're seeing now with the machine learning and things that we're starting to do is that the human being, the administrative functions gets taken away. But the magic of a human being is the ability to connect with a client that you'll never be able to put in a robot. So you need to optimize and say, how do you actually take technology and the human, you put that together and you create that very unique service. So that's our philosophy, to make certain how do we optimize the client experience in the bank. From our side, I want to thank Rian as chairman, for the board, for their support through the year. Then to my management team, I think we had an exceptionally good year, but I think the most important is our team members that is currently working, because without that team members, we can't achieve what we've achieved. Thank you very much.